Good morning, everybody. Happy Thursday. It's August 21st, 2025. Great to be with all of you today. My name is Bob Lang, and it's time for our Daily Bites here on Thursday. So big day, big week coming up here at the end of Friday. We will have word from Chair Powell after tomorrow's speech from Jackson Hole. A lot of people are very interested in what he has to say about monetary policy. As market players and traders, we are all interested as well too, because we are kind of in that transition period, call it a pivot point of where monetary policy is going to be headed. Will the Fed stay on the sidelines one more time and keep rates steady in September? The market is not betting on that right now. It's about a 4-to-1 chance that the Fed will cut rates, and we're down to about an 80% probability now, 79, 80%. Of course, last week before the hot inflation numbers came in on Thursday, or the PPI number, we were at about a 97, 98% probability that the Fed was going to cut rates. So I think the market is saying, hey, listen, we got to slow down a little bit and possibly wait and hear what he has to say and pay attention to a little bit more of the data. Speaking of the data, we have some PMI numbers coming out later on this morning at about 9:45 Eastern time. That's going to give us a little bit more information, a little bit more data about where prices are at and where manufacturing is at, and services as well too. So the markets are down again this morning. They've been down most of the week here, reflecting some of the worry and hesitancy from the past week and a half. Of course, we did hit new all-time highs last week in the S&P 500 and the NASDAQ, and the NASDAQ has pulled back sharply since then. Let's take a look at that chart here for a minute. NASDAQ 100 is the QQQ ETF, and we can see that yesterday we broke below that 20-day moving average, right? It's been good support here for the past several months, and we did test it back in June. We tested it, broke below it, but bounced right back in early August, and after that big sharp drop at the beginning of the month, but we bounced right back again. So today is a big day for the NASDAQ and for the S&P 500 and so forth. Having fallen below that 20-day moving average, if we can recover that by the end of the day here, then there's some hope for the bulls that we can keep moving forward. But if not, then it looks like we're going to test that 50-day moving average. Didn't quite get there yesterday. Came real close, but look, we didn't quite get there yesterday. We can see that the trend, obviously, for the markets is up, higher highs and higher lows. But we have been noticing some cracks. And one of the cracks that I've noticed here is like for the last couple of days. This is called distribution, professional selling, big institutions selling in front of everybody else. And how do we know that? Well, bigger volume on the down days than the prior day tells you that the market is in distribution. And my good friends over the Investors Business Daily did put out a change. They were 80 to 100% invested, back down to 60 to 80%. Kind of a cautionary move, of course, but listen, you know what? Take a look at the money flow. Money flow has been weak. Certainly not what it was back in July and late June. Certainly not what it was back in May, right? So we can see that money flow is starting to curb to the downside here right now, and money on balance volume showing the same sort of characteristics. Now, relative strength came off of that overbought reading, and now we're testing that 50 level one more time. If we break below there significantly, and it could happen within a couple of days. Listen, you know, if Chair Powell's message tomorrow is not taken positively or bullishly, there's nowhere to go but down for the markets here right now. And I think that 555 on the NASDAQ QQQ is certainly a level that we could see close to maybe one more time yet from yesterday. So again, play it cautiously here, everybody. I got to have some puts on. Yesterday we did a lot of house cleaning and closed a lot of call plays. Rolled down some puts. We had some big winners on some SPY and QQQ puts yesterday and rolled those down. kept that protection on, raised the cash levels to high levels that we haven't had for a long period of time. And now we're going to sit there and wait, right? We don't have to be active all the time and moving our money into the market, exposing ourselves to risk when we don't have a little bit more certainty. Now look at the VIX here, the VIX Volatility Index, up a little bit, about almost 5% this morning, right? 1650. You might not think that that's much at all, but if we do get a huge rise in volatility, and again, if the message yesterday is not taken bullishly or positively, the volatility is going to go through the roof. We could see a $3, $4, $5 move in the VIX tomorrow if that occurs. So what I'm telling you is that there's a lot of uncertainty right now. I don't know which way the markets are going to go. I don't know which way market players are going to take the message from tomorrow. But certainly with the Fed meeting coming up, and there's a lot of data coming out. We'll have the labor report for August coming out on, I believe it's September 7th. And that's a short week, right? That is what is that week? I believe that 7th. No, I'm sorry, the 5th, perhaps on the September 5th. That's a short week because of the Labor Day holiday. Now, of course, volatility rises into next week, and coming into the short week, we often do see volatility come back down. So we could see the markets dip and then rise back up again next week if volatility gets suppressed. But certainly the market is giving a message here right now that it doesn't like how things are going. We did see some price increases and some data this morning from Philly Fed and a couple of other reports earlier in the week. Let's take a look at that 2-year yield. So the 2-year Treasury yield still kind of hanging out about 3.77%. And again, if Chair Powell feels that it's right for the committee to sit on monetary policy right now and just sit back and wait, well, this 2-year yield is going to move right back up again. Well, why did it move back down over here? Because after the Fed meeting last time around the end of July, it was a strong indication that the Fed was going to cut rates, and the yields fell sharply on that expectation. So, we know markets move on anticipation and expectation, but they're not always right every single time. So if the Fed and Chair Powell decide to hold on policy next month and possibly even into October, well, we're going to see those 2-year yields rising again. So, and that would be a negative for small caps. So it'd be a negative for the markets overall. So, again, you've got to play both sides of the tape right now. You've got to play some puts. You got to be long some puts. You got to be long lots of cash. And you've got to be long just a few calls here just in case. So, balance yourself out a little bit right now. This is no time to try and be a hero. This is no time to be leaning in one direction or the other. You've got to have some balance here and protect yourself, because look, you know what? If you've been long the markets since earlier this year, so certainly since April, maybe even since May, you've had some nice hard-fought gains. Why do you want to let those go in a short period of time? It's not worth it. It's not worth putting your neck out on the line and taking excess risk. So I'm going to say it again. Stay cautious here right now. Just keep it light. If you're going to see some opportunities coming down the pike here, sure, go ahead and take them, but keep it smaller than you normally would. So a couple of things I want to mention here as well too. Walmart came out with earnings this morning, which were kind of in line to slightly ahead, but there was a mixed bag on the down the road here. So this stock is down about $2.5, $3 from the close from yesterday. We'll have some earnings coming out tonight from Workday, Intuit, also Zoom, ZM, and let's see, one more, Ross Stores, which came out, competitor TJ Maxx came out. TJX came out yesterday with really strong earnings. The stock was up nicely on that. So we'll see if Ross Stores can match that as well. So that's going to be it, everyone. Have a great day. I appreciate all of you spending a little bit of time with me today, and we'll be back on Monday morning talking about what maybe happened over the weekend, the last couple of days of trading for this week. Don't forget, next week, big week also. We have NVIDIA earnings coming up. We have the last trading week in August. And so far, August was looking really strong. into for the end of the month here, but now we've pulled back quite a bit and we are about flat, right? Looks like we're about, let's see here. Let's see here. We ended last month at 63.39 and we are at 63.95. So we're up about 1% so far. So if we come down a little bit more on the SP 500, another 1% more, we'll be flat for the month. So I always do take a look at the monthly chart, right? At the end of the month, we'll take a look at things. So certainly right now, you know what, we did have the crossover here and we are confirming it. Now, of course, next week being the last week, this could change things, right? If this doesn't confirm and the MACD on the monthly chart turns right back down again, well, we don't have a bull market here, do we? Right? According to my indicator. So let's see what happens, right? That's why they play the game. So have a great day, everyone. Appreciate everyone spending a little time with me again. And I'll see you guys all back on Monday. Have a good weekend. Bye.